Good morning. Today is Sunday, April 29th, 2018, and we're taking a look at the roadmap for the S&P 500. Last night on Saturday, I also posted a video, which you can go find on my YouTube channel or just scroll back through my tweets. It's just last night, a tweet followed by two tweets with the charts from that video. That went over April from an intraday standpoint in that video, and also over the daily chart, focusing on all the trading for the month of April and the option strikes that sort of worked around the month. So if you want to take a look at that, that's there for you as well. This is just a video to kind of go over the roadmap that's always pinned to my profile and updated daily. But on Sunday, I like to go through it and kind of talk about what the larger goals are for the week. And if something really big happens during the week that really seems like another video would be warranted, I'll of course post another one then. Or if anybody requests me to go over the S&P 500, I'm always willing to do that too. Okay, so here we are looking at our roadmap, and something that happened on Thursday and Friday, once again, reminds me of something that happened back here on April week 3. On Thursday, we gapped up open right on the 20-day simple moving average. We worked our way up through the 10-day, found sellers, and came back down to close just below it. On Friday, we opened right on or above the 10-day simple moving average, took a little look above it, and then failed and came back down, and we were never able to clear price back above for the close and stick that landing. Excuse me, and stick that landing on for a close above the 10-day simple moving average. And it does look like our low did a perfect kiss back and bounce off of this downtrend from off of the high that we set for the month. It bounced well above what was going on with the 20-day simple moving average, and it did sort of bounce right at the center point of the trading range for Thursday. Because when you hold a line here at the bottom of Friday's candle and look at it in terms of Thursday's candle, it looks like it really split the day in half, the day's range in half there. So that to me is bullish. It didn't want to retrace more than 50% into Thursday's big rally. It didn't bother with a back test of the 20-day, which makes me a little more hopeful that this might stick. And it rolled back to kiss back off of a downtrend. Once we break out of a trend, we often need to back test it, and if we find buyers there, then we know we're good to go. So two scenarios for tomorrow, April 30th, the last trading day of the month, would be that we have an inside day that will end up looking bearish and will be very frustrating. An inside day maybe between what was Friday's high and what was Thursday's low. That's a pretty big range, 26, 78 or whatever, or 70, 74, 75, 76, something like that was Friday's high, on down to Thursday's low at 26.47, and just sort of sit there trading within this 30-point range, maybe even breaking Friday's low and kissing back to this 20-day after all, and tagging this downtrend one more time. I think that if we come down and break down below this downtrend, we might end up breaking Thursday's low and filling Wednesday's gap close here. So if that's the case, one could look at it as bullish in that we're taking care of some housekeeping and filling this gap left here at the end of April so that we can start the new month without a big gaping hole underneath us like this. We could also look at it as bearish, that there just isn't enough buying interest and people are not feeling very good about the market or about Apple earnings that are coming on May 1st, on Tuesday after the bell. And they're just taking chips off the table to wait and see who's going to be the one to stick their neck out, because it's not going to be them. So that's the bearish scenario. The bullish scenario is that we come out of the box tomorrow, maybe not leaving too much of a gap, but we go and we run and we finally take out this 50-day simple moving average in the light of day, not like not under the cover of the Globex session and overnight with ES and forcing a gap up open on it, like we saw here with the 20-day and like we saw with the 50-day during April week 3, where we came up to it on a Monday, closed right on it, and then Tuesday gapped up open above it and ran only to make it just so high before rolling over and falling back again. I don't like seeing these simple moving averages taken out under the cover of a ES at night. You know, it just sort of smells bad. It smells of money going on under the surface, taking care of bets, manipulating options. When we see it happen in the light of day, it's driven by stock prices that make up the index rather than by futures prices, which are just goings on underneath the hood at night when the average trader can't take advantage of it if they don't trade futures. Even though you can trade round the clock now with SPY, it's still it's just not the same thing as trading the actual S&P 500 during the day when it is the price of the 500 components of the stock that are helping drive it up and down, rather than just the goings on of futures and the trading back and forth of SPY at night. So anyway, with that lecture over, we've talked a little bit about what could happen to the downside. I want to point to the 200-day simple moving average that's rising above 2612 as we open the market tomorrow. That means the 200-day simple moving average, in order to be broken, would mean we'd have to break last week's low. So I think that that's actually a bullish thing that it's rising above last week's low. It's showing that there's an average 200-day closing price that's above that point that they tested last week. And here we are going to start the month of May. It'll rise above tomorrow on the 30th, but it'll be well above it by Tuesday, probably up maybe as high as about between 26.15 and 26.20 by the time we start May will be your 20-day simple moving average. What we have going on above is, take out the 50-day, take out the 100-day. We have a couple of halfway backs in here. We have the 2018 open and the 2017 close that have been a factor going back and forth. People are trading a lot around this. People are trading a lot around the halfway back for March and the halfway back for all of 2018. And you can see that the 100-day simple moving average has been grinding sideways, clinging to a line just above the 2018 halfway back. Just above there, of course, we have an unfilled gap that we left from last week's rollover, or not last week, but from April week 3 OPEX week rollover at 27.08. We have the high that we made for April at 27.17 half, and then we have the downtrend coming off of the all-time high. I have to fix this note. This is where the downtrend was on Friday. I'm going to guesstimate that it's going to be starting at about 27.30 this week. And this bar just keeps getting lower and lower and lower and easier to cross. In fact, it's going to be down at our gap here. If we were to sit and mess around for a couple of, quite a few sessions, it would probably take until about, maybe not next week, but into the following week. And this downtrend will be there at this, will have sunk all the way to where we topped out for the month of April. So if we end up going lower, this bar is just going to keep getting easier to cross when we do finally bounce and move our way out. A lot of people are trading around this downtrend, so that's an element to watch here on the roadmap. The big goal to the upside is to fill this gap left over from the middle of March. From March week 3 options expiration. This is what I was shooting for as we went into the high on April week 3. I thought for sure that we were going after filling this gap because this gap was left there from OPX for the month of March. But instead we rolled over and fell back. So this is a big goal that's up ahead. Obviously, we're not going to do this all tomorrow, and if we did, I'd be very frightened because I would think it's just way too much of a move for one day. But in any case, over the course of this week, this would be our target that bulls are looking for to the upside, filling this gap up at 27.52. On the downside, obviously, there has to be a break of the 200-day simple moving average. we have only seen one single close uh, without two of them in a row yet this year. I think when I'm running QuickTime, it's hard for me to roll through the chart. The two programs, Thinkorswim and QuickTime Player, don't really like each other very much, but I'll post this statistic. But we have not put in two closes below the 200-day simple moving average in a row yet this year. And in fact, we have to go all the way back, maybe to the election, if I'm remembering correctly. That was the last time that we stuck two closes in a row below the 200-day simple moving average. So this is a very big line. It can break during the day, but we've never closed more than one day standing on its own below the 200-day simple moving average. So if a break of the 200-day simple moving average and a single close is one thing, but two closes in a row means that we're pushing lower. And if you are loading up your money in bearish bets, just know that the 200-day simple moving average is a very powerful point that brings in a lot of buyers and a lot of support. So just bear that in mind and note that this is rising over last week's low and will just keep on rising. You can see the trajectory of it. It is rising, and it will be up around 2620 by the time we get to the end of this week. A couple of other things to mind on the downside are the opening low and the closing low for the year. 2584 is the 2018 opening low. 2581 is the closing low. That closing low happened back in February. This 2584 opening low happened in the month of April. This rising uptrend that comes from off of the February low is right down here as well, approaching, right now it's about 2565, 2570. It's approaching this 2575 level that I've heard mentioned 2 or 3 times now by various talking heads on CNBC. Some people talking about looking for this 2575. But I did hear one of those talking heads come back again last week and say that this was a pretty impressive move down here and hold of the 200-day, and that maybe that 2575 is never going to happen because the 200-day is now risen too high, and people just aren't going to let that kind of technical damage happen to the chart without good reason. Now, maybe after that tariff stuff gets ironed out, they have those meetings in China next week. Kudlow, Mnuchin, and I think maybe even Pence is going to that, sending a lot of people to this meeting in Beijing next week for the tariffs. So we're going to get some news out of that, and then one of our members in the private account also mentions that there's a news article out that the tariffs on steel and aluminum are going to be delayed until maybe next summer, till July. They're not going to happen in May, and that's probably a clue that they're just pulling back the reins a little bit here on their aggression towards China and the tariffs, because they've got that group of people going out next week to meet in Beijing with the officials from China about the tariffs and about intellectual property rights and things like that. So anyway, I hope I have made sense here. I haven't gotten off on too many tangents, but to summarize, our 200-day simple moving average on down to testing the April low and the 2575 level, and this rising trend line off of the February low would be your downside targets. But remember that we have not stuck together two closes below the 200-day simple moving average since the election. I will confirm that later, but I do believe it has not been since the election. And on the upside, we want to see the 50-day simple moving average go down, and we'd like to see it go down during the session, not on a gap up open outside of the session. And we want to see price rise above during the session and close above the 50-day. And then we're going after the downtrend from off of the all-time high and filling the gap overhead at 2750. So that's your upside and your downside and your coverage of the roadmap for the week. Thanks for listening, and as always, good luck and good trading.